And if you can write a check for $26 billion, you can't really come crying to the government saying this will wound us. Google has gotten super fat because of that deal. And that deal is, by definition, anti-competitive. And I think that's what ultimately caught it, is the payments that it makes to exclude anyone who might compete against it.
Hi, and welcome to the Silicon Insider Podcast. Hey, Scott, how are you?
I'm well, Mike. Thanks.
It's been kind of an interesting week. Big news this week on various fronts, including one rather close to home for you. So let's get to it. The first one, obviously, is Nvidia. Nvidia announced on Wednesday its quarterly numbers. And impressive revenue, 35 billion versus what the market predicted at 33 billion, earnings per share 81 cents versus adjusted versus 75% predicted. And Nvidia said expects about 37.5 billion in the current quarter, the one that's already begun, and expects fourth quarter end of the year growth of about 70% from a year earlier. Unfortunately, those are all incredible numbers. If it was any other company, it would look pretty damn good. But you have to keep in mind that its annual growth last year from the year before was 265%. And so even as revenues continue to surge in NVIDIA, rising at 94%, at a 94% annual rate, for the previous 3 quarters, sales rose 122%, 262%, and 265% respectively. So no matter how good you're doing, if you're not doing as great as historically great as you did just a quarter ago, shares fell 2% on extended trading. Now, any other company that had 90% growth, that's $3 trillion in size, people would be like, oh my gosh, it's a miracle. But not Nvidia. Turns out that, well, as you might expect, 31 billion of that came from the data center division. Those are the folks doing the AI chips. But they also got another 31 billion, 3 billions in networking parts and that sort of thing, non-chips. So that's the company we used to know, is the 3 billion one. And then the 3 trillion one is after AI. We should probably put that on the calendar. It should be AAI, kind of like AD and BC. Yeah. Okay, they had great net licensing, but the most interesting one for the future is NVIDIA has already started shipping its next generation AI chip, the Blackwell, to select, they always do this to their biggest customers, first priority. So Microsoft, Oracle, OpenAI have already begun to receive Blackwell chips. And within the next weeks, NVIDIA will start sending Blackwell out to all of its customers. So we're heading into the next generation of AI. It should be quite a ride. What do you think? I mean, it's a miracle what you guys are done.
Yeah, these are really, really big numbers, and they show a lot. A lot of attention on Nvidia's earnings, not just because of how Nvidia as a company is doing, but they always want to know about AI spending in the future. And Nvidia, for the last several quarters, has really been optimistic about this, saying, A, everybody wants what we have, and B, we think we're going to be able to reach their goals as well as our goals. And that's why this is the most valuable company in the world right now. And these numbers were another extremely strong quarter that not only show that the past 3 months had a lot of AI spending, but looking ahead, they expect to see a lot more. And that just shows how entrenched AI is right now and what every company is trying to do. And again, we've talked about it. The foundation is really NVIDIA chips. They lead the way. There is room for Broadcom. There is room for AMD and some of the others. But NVIDIA is really setting the standard. And that's why they're pulling in so much revenue every quarter. It's really a huge number.
Yeah, and they're meeting their deadlines on deliveries, which remember we talked to a few months ago that there was some concern that Nvidia wouldn't be able to get the next generation chips out on time. Well, it looks like they've caught up. It looks like they're going to do it, which makes them even more unstoppable. Until this company stumbles a little bit, I don't see how anyone catches them.
Right. They have a really big head start, and that's what they do. Credit to Jensen Huang. He gets the company ahead. He seems to know what's coming next. They were very early to AI, and by being early to it, they are now the go-to company. And they've just positioned themselves so amazingly well that everybody wants a part of what they're doing. And so they've got these gigantic orders that keep coming in. And like you said, they make them, they meet their deadlines, and it's really just running. Uh, I mean, they're just hitting all cylinders right now.
Yeah, and if anybody's churlish about their success, keep in mind they took a big risk going into this technology, you
Right.
know? And Jensen just seems so cool. I mean, he seems almost unflappable through all this. I mean, we're going to talk in a little bit about another company that got in that world that is just flummoxed and drowning and may have pulled itself, into safety briefly, but that's a classic story of a company that grows like this. And Nvidia's not doing that. They're just moving along like a steamer, and nothing seems to be able to stop them, which is to the benefit of all of us. I don't know about you, but I'm finding more and more AI involved in what I'm doing. And,
That that makes sense. I mean, it really is finding its way into the workplace, into research, into what we do when we're online, the things that we search for. I find it more and more coming up in search results. And ChatGPT itself is becoming a big part of our lives. And I really don't know where it goes from here. I'm still waiting for it to be um, really involved in the consumer world as opposed to the business world, but it's making inroads there too. And I think the fact that it's getting better and faster can be traced to those chips and to Nvidia. And so they really are the foundation, I think, of this whole movement right now.
I mentioned a couple of weeks ago the experience I had of getting fooled by AI on YouTube, but now a woman I know who wrote a successful book a few years ago, she got a phone call from a friend saying, check out this on YouTube. And she went on there, and there was a man and a woman sitting talking, and they were talking her book. And it was apparently a riveting conversation. I had the same problem myself. I think the product comes from Google. I watched for 20 minutes a really interesting conversation between a couple. And I thought, this is really good. And then it suddenly hit me. I was watching AI. And, I mean, that's kind of for a guy that used to have a talk show, an interview show for 8 years on PBS, it's kind of chilling that I really thought their conversation was better than anything I could do.
I mean, imagine if you're in Hollywood right now. That's the biggest fear of your business, of special effects, of actors, of everything. It's a very legitimate concern that these images, not to mention, misinformation. These images are stunningly lifelike. They look really real, and that is a problem.
Yeah, especially if you're on a 13-inch, Mac Air screen. I mean, you don't see the wrinkles on anybody anymore. So, yeah. Okay. The next big story, the Department of Justice is going after Google in a big way. And I wonder if that's going to continue with the new administration. But for now, Judge Amit Mehta, the the judge who ruled that Google was a monopoly months ago, is going after Google Chrome, claiming that Google is giving this away in order to basically gives it away in order to drag people into its world, especially now into its new AI world. And he wants Google to be forced to divest Chrome. Um, I think it's $20 million, $20 billion,
Billion. Yeah.
$1 billion. And apparently, I didn't realize, but Chrome is worth about that much, maybe a little bit more. And so the Department of Justice will acquire Chrome and then what? Auction it off?
Yeah,
How does
maybe
it work?
this is an interesting case. I mean, we're talking about a super popular browser. We're talking about monopolies. We're talking about product placement. This really echoes a lot of the Microsoft case many years ago. And
Yeah.
now it's Google, which at the time that we were talking about the Microsoft case was kind of a scrappy company. And now it's gigantic. It has these billion-dollar deals with companies like Apple for placement of the browser. It's
Yeah.
got, I know my kids were given Chromebooks and, everything. It's it's just embedded into society, and to the point where, it's been found to be a monopoly. And so, will Google have to sell it, spin it off, whatever? The 20 billion seems, I don't know, almost to undersell it. I think Chrome and its placement and what it brings to Google search is worth, boy, just a huge amount. And so I don't know what it would do without it.
Well, yeah, and I have a couple questions about this. One of them is we always talk about the world now being an entire marketplace. And so we have a product that, yeah, it dominates, I think it has 61% or something of the US market, but is that the whole story? I mean, isn't it partly that this makes the United States economy more competitive against the rest of the world? I mean, why would we break up monopolies if they're not really true monopolies in the entire world? If the world is now our competition, or even if it's not even if it is the largest vendor, it still may be a small fraction of that entire world market. So why are we blowing these companies up? If it was 1956 and this was IBM crushing Univac and Burroughs in the US market, that'd be one thing. But this is we're going into the second quarter of the 21st century, and we have competitors everywhere. Why do we want to diminish that competition?
Well, the short answer is because it diminishes competition by being a monopoly. That's kind of the definition. I mean, try to be a browser or a search engine in America or the world right now going up against Google and Chrome. And that's the point they have, is that you and I are having this discussion that, gosh, $20 billion seems like not much money. That's the market value of, a whole lot of companies that would love to be $20 billion. And
Sure.
and that's just Chrome. That's one facet of Google's dominance. And in this country, if you ruled a monopoly, you gotta do something to not be a monopoly, apparently. And so if those overall rules change and we can say, hey, it's us against the rest of the world, maybe so. But again, they are a barrier to entry for companies that want to compete in that space.
I don't disagree, but I think they're less of a barrier to entry than they were in 2000 when they were destroying the entire advertising industry of major corporations by scooping it up under the guise of search. That's when they should have been, jumped on by the Department of Justice. I mean, I think they've been pretty good corporate citizens. I mean, I can point to some worse ones in Silicon Valley. Also, it's going to create chaos to some degree. It's going to wound Google because it's not creating, it's closing an entryway into a lot of its services. But Google also Alphabet pays $26 billion to Apple for Apple to carry it on all their machines.
Let me stop you right there. It doesn't just pay that money for Apple to carry it on the machines. Apple carries a lot of stuff on your phones, a lot of apps, a lot of engines, a lot of maps. It pays for a very specific reason, and that is to make it the default engine. And that's what, remember, the Justice Department found to be monopolistic.
Right.
And that, I mean, who can write a check?
That's what got Microsoft.
Right. And that's what got Google. And if you can write a check for $26 billion, you can't really come crying to the government saying this will wound us. Google has gotten super fat because of that deal. And that deal is, by definition, anti-competitive. And I think that's what ultimately caught it, is the payments that it makes to exclude anyone who might compete against it.
Right. It's the bundling, which it's always been the bundling the Justice Department goes after.
Yeah, the last time I was going to say that we heard the term bundling was, I think, back in the Microsoft browser days.
Yeah.
going up against Netflix, excuse me, Netscape, and et
That's
cetera.
great. Yeah.
Yeah.
Okay. So now, what do they do with Chrome? What does the Justice Department do with Chrome? Auction it? Kind of like bandwidth?
Yeah. Yeah, maybe so. I don't know. But it's Chrome is the basis of a lot of what companies do in search. And so I don't know if you are auctioning one entity or the whole sort of ecosystem that a lot of companies, including Microsoft, I believe, build on. And so it may kind of be like bandwidth, where you're auctioning it off to a whole bunch of people who get to use that technology and expertise. And that might make the search game a whole lot more interesting, especially now that it's becoming all machine learned and search is getting a little weird out there right now.
Yeah. I mean, I'm not a great fan of giant companies crushing smaller competitors, but in terms of Chrome, I mean, is it actually crushing smaller competitors, or is it just doing better than other big competitors?
I mean, I think yes to both. I think because it keeps other companies out of the game, it's doing
Yeah.
really, really well and making a lot of money.
Yeah, well, they all are, aren't they?
Yeah.
We'll see. Um, yeah, good luck. Good luck, Google, with all your, people in Washington. They're soliciting, uh, legislators to back you up on various things. And good luck, Justice Department. I mean, let's see what happens. Certainly the computer world got better when IBM was tied up with antitrust. Basically, that's how we got mini computers and even for a while personal computers, because IBM was so handcuffed by the Justice Department, it didn't dare come out with new products for new markets. And maybe we'll see a giant renaissance of search. We'll see. I think though that AI kind of obviates the need for a lot of this stuff. I noticed that when I go on Google now, the first thing I get is a whole bunch of AI responses. And you
Right.
almost get the feeling the rest of it's becoming superfluous. You got the answer right there.
Right. And the reason that Google can afford to do that is because it has so much money. And
Yeah.
so you're seeing an answer to your query, to your search, without having to go through the links that normally bring Google all its money.
Right.
Google can afford to do that. But if you've noticed who's using AI the most, Microsoft, because it's got a big investment in OpenAI. Google is in there. We got Salesforce in there. And that is what usually happens to these new hot technologies. They go to the big tech, trillion-dollar companies. Amazon, I'd throw in there as well, and certainly
Yep.
Apple with its iPhones. But that in itself is keeping a lot of smaller companies from succeeding. So will we see new search? Maybe, but something like this has to happen first, where there's a shakeup in Google, or else why would we and how would we see
Right.
a change in search?
No, and historically, we always had these companies mostly die, not get taken out by the government, but that would open the door for a whole new wave of entrepreneurial startups. And I sense out there are not as many startups as there would be if Google and Apple and Meta didn't exist. We'd have an explosion of venture capital and everything else. So that's for the good. It just has to happen. We'll see. We probably won't know the impact of this for 4 or 5 years, I would think.
Might get, you know, caught up in court for a while too. But right, the impact could take a while. I agree.
Okay, now this is the one that's close to home for you. Comcast. Comcast is going to divest itself of what, $6 billion worth of programming, cable TV networks, MSNBC, CNBC, USA Today, but not NBC. So you're fine. But what's the meaning of this? Are they just lost leaders that they don't want to carry anymore?
I mean, I wish I knew more about this because it may be close to home, but it's not home. Like my home is on the NBC side, on the news side. So I have
Right.
nothing to do with the cable guys except I watch them. But this bundling is interesting, for me or anyone, I think, to take a step back and see, we talked bundling of browsers earlier.
Right.
And I wonder, because remember the hot thing in cable was bundling, whether it was going to be
Right.
a CNBC and Discovery bundle, or on the ABC side, a Disney and ESPN bundle. And, CBS was bundling things, and everyone was that was the hot thing to do. And then I wonder if people were just like, well, gosh, how many of these bundles will we buy when we
Yes.
can just, I don't know, throw Netflix and a couple others out there? And so I don't really know if this is a step to say maybe the bundling of two or three things isn't what people wanted, but
Mhm.
rather the idea of all these cable things under one roof and then maybe putting them under another roof. I really don't know. There's a million pay grades ahead of me, but it is interesting to see that we've got all these talks from the big media owners, whether it's a cable company like Comcast or a big entertainment company like Disney, talking about what to do with these cable properties.
Yes.
And I don't know what they're going to do, but I don't know if they're going to continue to keep them all under one roof.
Okay, so Comcast is keeping NBC, is keeping the entertainment stuff, or is divesting those too, like Sci-Fi Channel and Golf Channel and E and all of those? Do they go too?
I think a lot of those go too. I saw one list on
Because a lot of
CNBC.
them just aren't profitable.
Again, I don't know what is and what isn't because I don't see those breakdowns, but it makes
I,
sense to put all the cable things, or at least a bunch of them, in one company because, again, these gigantic media corporations are struggling with debt and trying to be relevant to as many people as possible. And I just wonder if, in this age of streaming, how a big company is going to be able to define itself and stay nimble at the same time when you want golfers to stream here and movie lovers to stream here and sports fans to stream here. There's just so many opportunities and so many channels that weren't around when we were young. And I think we're still, as a society, getting used to juggling them all.
okay, so John Malone's basically doing a John Malone kind of thing. He's gonna create a separate corporation with all these second tier cable channels, and no doubt own 51% of that, but still keep mainstream Comcast with stations like yours on it. It's an interesting move. I mean, he's trying to separate out the low profit operations from the higher profit operations.
I mean, I imagine that's what everyone is trying to do, is figure out
Yeah.
how to maximize profit. And remember, when streaming was first taking off, and really to this day, Netflix is doing it on a gigantic level, and everyone else seems to be chasing them.
Yeah.
And so, isn't that what all these cable properties do now? They essentially stream product.
Right.
And some have ads, but a lot of them you can just record, you can stream when you want them. And if you're not Netflix, how are you justifying your bottom line? And I think that's what a lot of people are just wondering. How do we become more like Netflix, because they are just running away with the crown right now?
Let me ask you a question. Gordon Moore always said, the great Gordon Moore, great late Gordon Moore, always said that first entries into markets usually don't make it because they make all the mistakes, they get all the arrows, and the second player and the third player are the ones that usually win. That's kind of still true, but it sure seems like a lot of companies right now are basically first entries or very nearly first entries, and they're continue to win. I mean, we just talked about Alphabet. I mean, yeah, there was Ask Jeeves and those things, but in terms of its business model, it was basically the first in. It's never lost its position. Netflix, went from an entirely different business model to streaming. They're in first place. We did have a couple companies like Meta, Facebook, but really it's been sitting there for almost 30 years now. Is it a different world now where you can win by just entering a brand new market and the competitors can't keep up with you? Are these leaders these CEOs just smarter, or is it a changing nature of the market, of the business?
Yeah, I don't know that any of those companies are really first movers. Google was nowhere near the first search engine, even the first search engine to sell ads. But once they got a hold of the market dominance, they haven't given that up. But they probably went to school on Yahoo, on Ask Jeeves, et cetera.
Yeah,
Meta, same thing. I mean, they talk about the
yeah,
metaverse. They
MySpace and
still,
all that.
yeah, I mean, they lose a lot, but right. They went to school on MySpace and all those guys, and they just figured out how to sell ads better. Credit the likes of Sheryl Sandberg, and now they have market dominance. Netflix, not the first streamer. I think they went to school more on the cable giants like HBO from our youth, Cinemax, Showtime, and just figured how to tweak that system and get more subscribers, and they became the dominant ones. Even though if you think about it, Netflix isn't even among the first to do its own, stuff. I mean, HBO was doing that and all those other ones, Stars. I mean, there were just so many, and they were not just streaming movies that already existed, but even creating their own stuff. Netflix just managed to figure out how to tweak it and do it so much better. And now all the other ones, whether websites or social medias or even cable, they're all trying to figure out how to bundle things and get together and survive. Whereas Netflix and Meta and Google, you name the three leaders in the industry, but you could also take hardware products that all came before Apple and then Apple, who figured out how to do it better. And now they're the second most valuable company in the world.
So it's a secret sauce. I mean, Apple, I know Apple's was, the design and the packaging and the marketing and all that. Because their computers, the two wasn't that much greater than the 50 other PC companies out there. Google decided we're not going to prioritize search results by our sponsors. Initially it's going to be the best result, the most popular result. So that made them look more honest. I mean, it seems like there's one tiny little thing that each of these companies figured out that set them apart from the landscape, and it wasn't necessarily obvious at the time. I mean, I was there literally the first couple of weeks of eBay. And when they showed me their business model, I said, "You're not going to hold the money? I mean, you're an auction house. Shouldn't the money go through you?" And they said, "No, we're going to trust the buyers and the sellers to work with each other, and we're just going to provide the platform." Turned out to be the transformative event in that field. And these things aren't obvious. And yet, when we look back, we go, "Oh, hell yeah, that's why." And,
Yeah,
and
I mean,
it, it
these are
seems
all
it seems to make all these companies, in a way, monopolies. I mean, you could say eBay's a monopoly. You can certainly say, Twitter X is a monopoly or very close to one. And it's always that little thing.
Um, these are companies that lowered the barrier of entry, that made it easier for consumers, and that figured out how to make money through mostly advertising or
Yep.
subscriptions. And they just did it better than the other guys, and they buried them. And final point, no, Twitter is not a monopoly. Twitter is struggling to stay afloat in the social media world, and everybody is struggling to try to make money in that world. So that is right
But in
for
terms of
dominance.
usage, yeah. Well, I
Right.
remember when Amazon, I wrote several columns for ABC talking about how come Amazon hasn't shown a profit in 6 years, 7 years. I had great sport on that until all of a sudden, it worked. Bezos models suddenly clicked in and now they rule the world. And there's a truck in front of my house probably right now putting a package on the porch. So, I mean, it just interests me that we didn't see companies dominate that long in the past. And now they really dominate.
Yeah, maybe, but I think some companies did dominate in the past, and that's what the current Metas and Salesforces and all those are worried about. What if you're the next Intel? What if you're the next, Apple 1.0? What if you're the next
Yeah.
Dell? I mean, and that's even recent history, not to go back further. Companies have figured out how to dominate, and they've figured out ways to blow it. And that's still something that I think haunts the current big tech companies right now. And they've just got to stay on their game somehow, and that's not always easy to do at all.
I think they also found a way to scale. I
Yeah,
think they understand scaling better than any company in the past. You know, I mean, there were some great CEOs back then. I mean, you got Hewlett and Packard, but they never figured out how to scale their calculators. They sold them one at a time, you know.
Yeah, perfect example. I mean, there was a time when you'd think Hewlett Packard was going to run Silicon Valley forever. And
Sure.
now, who says coming out of Stanford Business School they want to go to work for HP? It's tough to stay relevant, no matter how big or successful you've been.
Okay, well, we'll see. I mean, Hewlett Packard didn't become really Hewlett Packard until 1950. Now you go forward 40 years, that's 1990, and it was already losing its edge. I don't see Microsoft or Meta or Alphabet losing its edge right now. I see them just taking off. Well, maybe the feds will stop them, but other than
You're,
that, what
yeah,
stopped?
but you're proving your point. Microsoft was stopped by the feds. It lost a ton of value before it came and turned things around. Apple was, gosh, practically a penny stock compared to where it is now.
Right.
It turned things around. Hewlett Packard did not turn things around. Intel is trying to turn things around.
Yes.
Meta went from all the way down to about 80, $90 a share. It was still doing all right, but now it's in the 500s because it turned things around and figured out how to dominate again. Some of these companies can figure out how to make that turn. Others just can't.
Okay, well, as long as we're on Intel, I have, well, let's talk about this first. Nvidia is doing so great. Supermicro uh, has been in big trouble. As we talked about, Ernst & Young dropped out as their auditor. It looked like the company would be delisted on NASDAQ. Well, they announced this week that they plan to remain listed and that they're hiring a new independent auditor. And the stock spiked about 31% on the news, which is not a lot given how far they had gone down. Speaking of penny stocks, they were almost there. And now they're back up 31%. And they're valued at a fairly sizable amount. I'm looking at 15 to 20 billion now. Now, there's a company that did not figure out how to deal with rapid growth. Do you think they have a chance, or is this just going to be a roller coaster ride with this company?
I think they have a chance. I think getting another auditor on board, we'll see what they say the next earning report.
Yeah.
Investors, I think, that jump in now on this news are speculating that it survives and grows. Obviously, there's not much further down it can go after such a, I think it lost 85, 90% of its value. And so now, there may be a Phoenix story to an extent. But remember, this wasn't all that hot of a company before it sort of caught that AI pixie dust. And maybe it goes back to where it was before, sort of your, pick and shovel, standard chip maker, but at least one that the books match up. And that's really important for it to stay alive.
Well, they still got the intellectual property and, they still have products.
Right.
The question is, was there any problem with the products, or they just couldn't execute, that they were just tripped over their own feet, and that's what got them in trouble?
Right. We don't know. Nothing really that I can remember came up about the product. It was accounting problems, to the point where a giant accounting firm left. So I don't know where they go from
apparently
here.
the word on the street is that it wasn't for any kind of illegal activity or any of that. It was just some sort of problem between the auditor and the company. Maybe they said we're worth more than that, or you missed this, or whatever. But there's apparently nothing illegal that happened.
We don't know. And what we know now is that it seems to have righted the ship, at least for now. And, it'll be interesting to see in the next couple of quarters what they say and if they get back to profitability. And who knows? I'm guessing this company isn't going to be leading with AI talk like Nvidia does and a lot of the other companies that are hot. Yeah. I'm guessing it leads with, hey, we can actually make payroll and we are not cooking the books kind of talk. And that's what it needs first to establish a base and just sort of reassure long-term investors that it's not going away. And employees, by the way.
If you were really going to take a risk, you would have bought the stock last week. Because I suspect most of the money you're going to make on this company, it arrived this week, and now it's not. It's going to be a struggle to keep going. But it's got a market cap of 15 billion, so You know, I never talk about buying stock, but if you were a speculator, last week would have been the week to be the risk taker.
Who knows?
Okay, finally, uh, before we run out of time, Qualcomm. Uh, it looks like it's going to lose its sweetheart deal of providing Apple with its chipset, and it's going to have to go in different direction. And it's been talking to analysts and playing up the fact that it's going to target a different customers. Interestingly, they mentioned AMD and Intel. I'm not sure putting Intel in your list of your of your bailout strategy is the best place to be, but this is an interesting situation. I mean, we watched Apple do it with their microprocessors a few years ago when they finally, you know, moved away and started making their own. It looks like, Apple's doing it again. Can Qualcomm survive this? I mean, it's a big company.
Yeah, gosh, Qualcomm has survived everything. This is such a quality company. Remember the
Yeah,
dot-com boom, they were just so high, and everyone was like, wow, Qualcomm, San Diego, this is incredible. That level has been left in the dust by this company. All they do is succeed, and all they do is pivot correctly. And so this is just, it seems like such a well-managed company that there will always be challenges, but they really rose to the occasion. I think every time you look at Intel and what it missed out on, you
yeah,
look at Qualcomm and you see what it succeeded at, and that's been
yeah.
the difference.
Oftentimes the same thing.
Exactly. Yes,
Yeah,
absolutely.
yeah. Well, it is the pride of San Diego. Having been down there, everybody, well, what do you guys do in tech? Well, we have Qualcomm.
Yeah.
So, okay, well, let's keep an eye on them. Maybe they're off. Their trading was off 6% in midday on Wednesday. So, that might be an interesting company to watch in the short term. If they can turn it around, as you say, they'll be another Phoenix company. I mean, I think
No, no, no. They don't need to be a Phoenix. They are super
they're
high
already
flyer, and they've
there.
been high flyer, yeah, for a long, long time. They're really well run.
Okay, well, I mean, good for them. I hope they make it. I mean, really, everybody, it really is the pride of San Diego, and those guys, they're kind of forgotten in the corner of America. Uh, and they've always wanted to be a major player, and
It's
Qualcomm.
America's finest city, Mike, as they say.
It's certainly the prettiest, that's for sure. Okay, that's it for now, folks. You can find us on Spotify, Anchor, Google Podcasts, Apple Podcasts, and YouTube. You can see Scott on Facebook and X, and of course, almost every weeknight on NBC Bay Area, which is still part of Comcast, and hear me regularly on the BBC World Radio Show Business Matters. Have a great weekend, and I guess happy Thanksgiving. We'll see you next week. Bye-bye.